BlackRock's dire inflation warning. Get real assets. So Larry Fink from BlackRock. Now I've got my own opinion on BlackRock and Larry Fink himself, but I won't go into that in this video. But he recently gave an interview where he gave a dire warning on inflation, about food shortages, about energy shortages and the prices of food and energy, and what that will mean with transitioning in the energy space. And ultimately, I'll share later on what that will mean for investors, for silver, etc., and how I am preparing for all of this, how I've been preparing for all of this, and some of my recommendations for you guys. So what we'll do is we'll just cut to this clip now. Just listen to what Larry has to say.
But the implications of this is going to mean that every company is going to reevaluate where they're building things, where they're manufacturing things. It really means it's going to be, and we witnessed even before the war, we witnessed supply chain problems worldwide. And I actually believe it's going to change how we think about supply chains, and it's going to be highly inflationary. Yeah. And it's going to, it really can lead to, ultimately great outcomes, but in the next 3 to 4 year period of time, it's going to lead to big issues.
I think this is a headline right here. Yeah. And I think it's interesting because Larry Fink has seen, you've seen it all. You think what's the unraveling of the relationship between the West and Russia, and maybe even China going forward, is more treacherous than what happened during the financial crisis.
Yeah, because the financial crisis obviously destroyed banks and a lot of people's livelihood who had leverage. Right. But keep in mind, when you see the increase of wheat to the extent it is, and what it's going to mean to food prices for everybody, when you see the increases of gasoline and what it means for everybody in heating, this is not just a segment of the economy or a segment of the world. This is the entire world. This is going to be impacting everybody. This is so regressive for so many people who are in need, who can't afford the rise of gas or rise of food. This is much more impactful than somebody who was leveraged in mortgages. Right. And so that was a segment of the society that were destroyed. This is more pernicious and troublesome that it affects everybody in the world.
And how long does it last? Let me just ask this: how long does it last?
Well, let's see what the ultimate outcome in Ukraine is. We are going to find new supplies of oil elsewhere. Maybe OPEC will begin to raise their production. The U.S. will begin to invest again back into our energy fields. Right. High energy prices is going to accelerate decarbonization. More and more people say, I can't afford gas, I'm going to buy an EV. So we're going to see behavior changes. And over the next 3 or 4 years, we are going to see less dependencies, which is really good for the world. We're going to have a better mix of energy between hydrocarbons and renewables. And so it's about a 2 to 3 year possible uncertainty, but I actually love where we're going. Yeah. But it's going to be treacherous in between.
Well, you're making a bet that will be the response. I would agree with you, but I don't think other people agree. I would say people are looking and saying, I can't go to the gas station anymore. It's too expensive. I'm buying an EV. We are seeing some of that. But on the other side, you're hearing people say, start drilling here again.
Absolutely.
Do you agree with that?
But Liz, we are drilling. Let's be clear. So let's talk about what has happened in the energy sector in the United States. From 2013 to 2017, we invested 40% higher than any other time. We over-invested, and we saw a lot of losses in a lot of the startup companies, a lot of the shell companies. And then, as a reaction to the overinvestment, the last 4 years, we underinvested by 40%. And so much of it has to do with these cycles that people have missed. In my CEO letters, I've always said, if we're going to have an energy transition, it has to be fair and just. This is not fair and just. And I said, you should never divest of energy companies. We have to be working with them. I have meetings at least once a week with 1 or 2 different CEOs from the energy industry, how they can decarbonize, but at the same time, how can we invest with them so we have a fair and just transition, so we could have the amount of energy that we need, so we could have independence.
But in the short term, is it 175 a barrel? Is it 180? Is it 110?
No, I don't. I think it's going to be elevated for a long time until we have these corrections. And so, we are going to have to be living with higher energy prices, like we did in the early 80s. Early 80s, I mean, energy got as high as 149. I don't expect that to be the case. Yeah. But could we see energy between $90 and $110 with maybe occasional spikes? Certainly. But I do believe over time we're going to find that substitution, and maybe there's going to have to be some type of, in Europe right now there is fiscal stimulus to helping the consumers in higher energy and heating costs.
And even billionaire investor and the real bond king, Jeff Gundlach, says as inflation rages using 1970s methodology, CPI is now 16% year on year. Financial assets are tanking. Year to date, investment grade bond index down 5%, S&P down 12%, so traditional 60-40 portfolio down 9%. Some core bond funds down 8%, ARK fund down 41%, so aggressive 60-40 down 27%. Now, Jeff says 1970s methodology. However, if we look at Shadow Stats 1980s methodology, we're already at 16%. And Russia-Ukraine war worsens, fertilizer supply issues, potential widespread famine on the horizon, experts say. And I absolutely believe that we are going to see massive food shortages. In fact, in Turkey at the moment, sunflower oil will be limited to 2 litres per family per month starting next week. And, Ukraine is one of the largest exporters of sunflower oil. Also, Ukraine's one of the largest exporters of wheat and fertilizer, along with Russia. I think I've mentioned in other videos about 50% of fertilizers come from Ukraine and Russia. I've been hearing for some time now, well before this conflict started, that China have been stockpiling wheat. For months and months and months, they've been stockpiling wheat. I've just heard that Argentina has cut off exports of soybean meal and soybean oil. So, yeah, and look, David Morgan says everyone should be stocking up on non-perishable foods. Minimum 90-day supply if you can. Don't wait till later this year. And I agree. And just to let you guys know, I have been stocking up. In fact, so I have bought these buckets from Survival Supplies Australia, and we bought these in 2021, earlier in 2021. I have about 5 months worth of food. These buckets from Survival Supplies Australia. The food here lasts for 25 years. So we've got about 5 months worth of food. We've got about 200 litres of water, fresh water, diesel, solar energy. Also buying a farm at the moment. Jim Rogers, he's been saying for a while now, but just in the last week, says one of the best investments that anyone can make is to own a farm, producing real food, because he's worried about what's coming. And global food prices may climb another 22% in the face of the Ukraine war, a UN report says. Ukraine and Russia account for more than 1/10 of all calories traded globally. Think of that for a second. And I had to share this great tweet from Douglas Carr. Convo with Farm today. Meat processors booked out a year because stockpiling beef. Farmers in South can't get fertilizer for crops now. Farmers in Midwest are switching, can't get nitrogen nor fertilizer. Buckle up, folks. The media isn't even warning you. So it's pretty obvious now that we've got an inflation problem where it's only going to get worse with supply chains and with conflicts and all this stuff going on. So the deflationist is that if there's people out there still talking about deflation, almost ignore them. Yeah, look, we might see interest rates rise and we might see asset prices fall, like Jeff Gundlach has already mentioned. But we're in an inflationary environment. By the way, I believe that if we see any little bit of deflation, it's only going to be around for a very short period of time, because governments cannot have that. Central banks cannot have deflation for any period of time. And, well, you know what they'll do there. But I think we are going to see some very difficult times. And so I warn people, David Morgan is warning people, start stocking up on food, water, diesel, power. If you can start producing food and growing your own food in your yard or on your property, start preparing. Don't wait much longer, because you're not going to have much time left. Now, as Larry Fink said, oil and inflation is likely to remain high for years ahead. And personally, I'm invested in real assets to take advantage of both the debasement of currency, and that's mainly physical gold and silver for that. But I'm also invested heavily in the energy sector, and I've shared this since I started this channel about investing. How I've got investments in coal, oil, natural gas, uranium, because I think uranium is going to be a big one that not a lot of people are really talking about now, although there seems to be a big shift around uranium and nuclear power. And by the way, it's interesting, I've got a video coming up soon about silver being used in this rebuildable energy. And what you might not know is that silver is actually used in nuclear power as well. And I'm invested in that longer term, in the rebuildable. So even though I'm invested in fossil fuels and the traditional energy, I'm also invested in the rebuildable energy. And I use that term rebuildable because it's something that I've studied. I've invested in this sector for a long time. I know how it works. And even though I have my own opinions on it and all that, I'm not an idiot to not see the trends and not to see where the powerful elite, the bankers, governments, the elites are pushing society. And so, you know what? I'll benefit off that. I'll trade that. So I do own a hydrogen company based in WA. I owned another rebuildable company that was taken over by Shell. So I have direct investments in rebuildable energy, but now I'm mostly invested in companies that mine the minerals that's needed for the rebuildable energy sector, such as nickel, aluminium, copper, lithium, cobalt, zinc, and silver, which, as I said, I'll talk about more in a future video, how much silver is actually used in the rebuildable sector. And I think that might surprise a few of you. So anyway, guys, what do you guys think? Do you agree with Larry Fink? Now, I've got my own opinions on Larry, and I've got my own opinions on Blackrock, which I won't discuss here right now. But what do you guys think? Do you think we're going to see food shortages, energy shortages, high prices in both food and energy, and high inflation and debasement of currency? And if so, how are you guys invested? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, guys, and I'll see you all again on another episode of Finance Uncut.